Hello, this is Matt on the Moon Lambo channel. One of the most well-known XRP chart analysts out there says that all eyes may soon be on XRP, and that frankly, the path of least resistance for XRP is simply up. That's what the charts indicate, so I'll share with you the specifics from that analyst. And also, I want to highlight, and I've done this a few times over the years, and I hadn't done it in a long time, so I thought this would be an excellent time to talk a little bit further about this, especially given the sentiment out there. But it's the idea of thinking long-term when it comes to investing, and just how bad it actually is if you miss the big moves. If you miss just a few of the best days of each year or a decade out there, you're going to have a bad time. You're going to get wrecked. So you'll see what I'm talking about as I go through this. But look, it's simply required to arm yourself with knowledge, arm yourself with as much data as possible when it comes to what types of practices result in people getting rich. Like, it's required to make a fortune in crypto. It's required that you understand these basic things, and then let's just say implement your own little personal policy and procedure as a result of that. But look, I want to be clear at the outset, I don't have a financial background of any kind. I'm not offering financial advice, and you definitely should not buy or sell anything because of anything I say or write. I'm just an enthusiast who enjoys making YouTube videos about crypto topics, but just as a hobby and just for fun. Now, at the time I'm recording this, XRP is at 78 cents, Bitcoin at $43,123, market cap for the asset class $2.11 trillion, and Bitcoin dominance sliding down even further at 38.57%. But markets are green today. Don't mind seeing this. Here's the 24-hour chart for Bitcoin. In fact, it got as high as $43,459. So it's just chopping, trading sideways. It's been doing this for a few days at this point. And I'm very curious to see when we're going to finally get to that euphoric move to the upside for altcoins. Because here's the cold hard truth, my friends, and this is not bad the way that I see it. The vast majority of cryptocurrencies out there have not gone on a big run out there. And it's easy for investors to feel like, oh, whatever I'm holding, it's not moving. Because there's always something in the news that's moving, right? Even if it's just a small percentage of coins, you always feel like you're missing something, right? You're missing out. That's where the FOMO comes in, resulting in people buying tops of market cycles and such. But the truth is, it's not just XRP that hasn't gone on a parabolic rally this market cycle. Almost every single coin on the planet has not, and there's over 15,000 of them according to CoinMarketCap. They put a little tracker in the top left of their page. So not exactly a problem here. Yet people are fearful when there's so much opportunity out there. Here's the Crypto Fear and Greed Index at 23 out of 100. The typical retail speculator doesn't know what the hell is going on. It's completely ridiculous. Let me show you what's actually going on. Here is an article from CNBC, and this one happens to be from March 24th of 2021. And this is titled, "This chart shows why investors should never try to time the stock market." Now, this is undeniably true, but it's also true of crypto. You shouldn't try and time market cycles in crypto either. In fact, doing so it's even more harmful because there's so much more volatility and so much more opportunity in crypto markets. It's even worse if you time markets in crypto. And so I want to share with you a few parts from this article, and then specifically how this relates to XRP. Please be aware, if you've never seen me talk about this or anybody talk about this, you need to know this. If you miss just a handful of the best days each year, you make almost nothing investing in the stock market and in crypto. There's just facts, which is why I always tell you, my entire strategy when it comes to investing is to do precisely nothing. Price goes up, I do nothing. Price goes down, I do nothing. Until I'm sufficiently enticed to sell, which means that my crypto is going to have to be worth way, way, way more than it is today. And it's already up substantially from where I purchased it, but I'm not sufficiently enticed yet. When I am, yes, fine, I'll sell. Other than that, I literally do nothing, and I don't emotionally respond to volatility, which is a known factor and has been a known factor for 13 freaking years. Given that's a known factor, how does it make the least bit of sense to emotionally respond to what data would tell you is going to continue, at least for the foreseeable future, right? Not the least bit scary. But check out this article. Timing the market is difficult at the best of times for even the most experienced traders. Now, Bank of America has quantified just how large the missed opportunity can be for investors who try to get in and out at just the right moment. And pause. How many of you have been guilty of this? Everybody's done this, right? Something's moving, like, oh gosh, I want to get it. I want to get it right now. Or, oh gosh, now this other thing I'm holding, though it hasn't been doing anything. I should just sell this. It looks like this other thing's going to go. How many of you have done that? And I'm not saying this to like shred you or anything, but it's a human thing. Like, humans do this. But you got to realize it's not a good idea. So like pretty much everybody on the planet has done this to varying degrees. Learn that it's a bad idea so that you can stop making very poor financial decisions, right? Because this is what data shows people do that screws them. You just get completely wrecked. R-E-K-T, wrecked. Piece continues. Looking at data going back to 1930, the firm found that if an investor missed the S&P 500's 10 best days each decade, the total return would stand at 28%. Did you guys hear that? If you miss the 10 best days of each decade over this 90-year period that's being cited, that's what it is from 1930 to the end of 2020, that 90-year period. If you missed just the 10 best days of each decade, meaning you missed 90 days total, your entire investment over 90 years would be up only 28%. That's it. Over 90 freaking years. If, on the other hand, the investor held steady through the ups and downs, the return would have been, are you ready for this? 17,715%. Oh, but you're smarter. You can do it. You're the wizard of smart that can time the market. You can, like some sort of magician, get in and out of positions, and it's going to play to your benefit. No. That's not what the data says. The data says you're going to get wrecked. Think about that. So again, you're talking about over a 90-year period. That's almost 33,000 days. And if you missed the 90 best days, your investment over 90 years was only up 28%. If you missed 90 of the best, if you missed the 90 best days out of those 33,000 days total. What does that freaking tell you? Now, okay, so now we know that. Let's go ahead and apply this to XRP, right? Because there's still so much opportunity out there, and I just wish more people understood what I'm talking about right here. I'm glad you're listening. But look, people that bought XRP in 2013, many of them had to wait over 1,500 days for it to go from about half a penny to almost $4. Over 1,500 days. That final bull run lasted about 17 days at the end of that market cycle. So think about that. Just 17 days out of over 1,500 days had the euphoric price action we all want. And so when you understand these numbers, it's easy to see how people get tired or impatient and feel like, oh, this investment, it's just been doing nothing. Well, most of the time it's doing nothing. That's the point. That's what the data shows. Which is why all the people that were selling their XRP in the beginning of December 2017, oh my gosh, everything else is going, my XRP isn't. Those people had a bad time. They sold it, they chased something that had already pumped, and then they missed the biggest run in the history of XRP. And XRP's been around less than a decade on openly traded markets. It's been around about 9 years, roughly. Just ballpark, about 9 years. So it's had one massive rally, right? 80,000% from bottom to top last market cycle. 80,000%. Do you not think it's going to happen at some unknown point in the future again? Well, right. Of course it is. I mean, that's how I feel anyway. No way to technically know for sure. And so that's why I'm telling you, like, it doesn't make a damn bit of sense to be freaking out about this. So, like, do yourself a favor, arm yourself with this data. You buy, you sell, I don't care. It doesn't matter to me what you're doing. Just make sure you're aware of this. So the next time you think about emotionally making a financial decision, or you just get impatient, look at this. Pull up this article, you know? It's just cold hard facts, folks. You can make 28% in 90 years or 17,715%. And again, with crypto, the implications are even greater. Much bigger here. So this is why, again, my strategy is to do precisely nothing. It's not going to happen on my timeline. The XRP is not going to move just because I want it to move. It's not going to move because you want it to move. It's just going to eventually go out of nowhere. And the whole market moves in tandem. It just is what it is. Take a look at this from chart analyst Credible Crypto. Actually, this is the one I wanted. Here we go. While Bitcoin recently swept our wick lows at $42,000 and Ethereum dumped even further below its own, XRP has held up incredibly well through this correction, and has not gotten close to its own wick lows. Path of least resistance seems to be up. All eyes may be on XRP soon. And by the way, this is in line with what I'm seeing from a number of analysts, including Love Crypto, I highlighted just the other day. Chart analyst Michael Vandepop, who doesn't even like XRP, he's like, yeah, it's worth looking at XRP here. Just kind of fascinating here. And then also he cited in a separate tweet here. Here, where was it? Oh, it's at the bottom here. Okay. And then he said, if consider when we had the recent liquidation events for crypto, and Bitcoin got down to whatever it was, 39,000 and something. Well, from those levels, he notes here the following: XRP rallied nearly 60% from 63 cents to nearly $1. Bitcoin went from $42,000 to $53,000, and Ethereum went from from 3,500 to 4,500. I'm sorry, it wasn't the most. Excuse me, folks. I'm sorry. Excuse me. It wasn't the very most recent one. It was the time before that, when people were hoping that when Bitcoin hit about 53,000, it was going to continue rallying. Maybe we'd see yet another all-time high. It was that time, so I apologize. Anyway, so he noted here again, XRP rallied nearly 60% from 63 cents to nearly $1. Bitcoin went from 42,000 to 53,000, and Ethereum went from $3,500 to $4,500. Not only did XRP outperform both to the upside during that relief rally, it's now correcting less than both after. So there you go. Look, it's all good things in time. Just patience is the name of the game. And again, I don't know when XRP is going to pop again, but I firmly believe that it will. I could not be more confident that's going to happen, but it's not going to happen just because I want it to or because you want it. It's not just going to magically do that. And right now, think about this. It's already been over 4 years since XRP had its all-time high. It was on January 4th, 2018. So maybe we don't have to wait that much longer. Maybe this is the calendar year where it finally happens. But we've seen this before. We've seen this movie play out. XRP went from half a penny to almost $4. And it took over 4 years. And most of that time, nothing was happening. So what? It is what it is. Either you have exposure during those time periods when the most exciting volatility happens, or you don't. But you don't control it. So there it is. Let me know what you folks all think below about this. I don't know if you find my argument persuasive, but I find it very persuasive because, again, it comes down to data. I'm not a financial advisor. You should not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Lambo.